Welcome to Looking at the Markets with David Modell. Today I'm going to give you a very basic introduction to Fibonacci retracement. Now what is, first of all, Fibonacci numbers were invented a long time ago. And they're numbers that are considered very special both in nature and in life. And they can be very useful for determining whether a reversal a stock does not just go up in a straight line. It's like a zigzag, okay? And so, it might go up for a while and then retrace or go back in the opposite direction a little bit and then go up a lot and then retrace a little bit and then go up a lot. So it's like a lightning bolt pattern or a zigzag, stair steps, whatever you might want to call it. So you have these little retracements in there. And you want to know, with every little retracement, is it just a minor bump in the road? Or is it a real turnaround? Okay, because let's say you're long. You bought a stock, okay, and it's going up, but then it has these little retracements. You want to know, should I take profits, or is it likely to run? Is it likely to keep going up after the little bump in the road? All right, and then same with shorting a stock. If you're shorting a stock, it's going down. It's going to have retracements. It's going to come up a little bit, then go down, then come up a little bit, then go down. So you want to know whether those are just little retracements, little stair steps, or is it a real reversal? Is it a real turnaround, and is it going to come back up and keep going up? And should you take profits? All right, so Fibonacci numbers can be very useful. The percentages you want to know are, and there are other ones, but and we're going to focus on retracement and not extension today. All right, so we're going to focus on 38.2%, 50%, and 61.8%. There are other levels, but these are the most popular ones. Interestingly enough, 50% is not an actual Fibonacci number, not originally, but it's commonly used. All right, so we're going to focus on these three. Let's clear it out. Okay, so first thing you want to do is, now you can calculate them with a calculator, but why do that nowadays? You might as well just use the tools that are online. I like to go to Google and type in Fibonacci retracement calculator. And you get a whole bunch of them, and you can pick your favorite one. All right, today I'm going to use the one from babypips.com. There it is right there on Google. I just clicked on it, and there it is. All right, babypips.com. It's for Forex trading, but I've noticed that it's really just calculating numbers for me. It doesn't matter whether you use this for Forex or stocks or commodities, whatever. The numbers come out the same just for calculating the, it's just multiplication, basically. All right, so we're going to use another free tool here. This is from stockcharts.com. And I'm going to use their basic charts. Okay, so this is Pepsi. This is the daily chart. I'm going to use it as an example. And you can see an uptrend here. All right, so let's say you noticed that there's a resistance level here. You noticed that Pepsi had an up move, but then it could not get above 104, and that was resistance, and then it just couldn't get above it, and then it went down, then went up to that 104 level, couldn't get above it, went down, and finally came up to it and broke through. So I'm gonna consider this the starting point of the uptrend, and and then this is the ending point of the uptrend so far, about 114. And notice that it hit 114 or so, and then it's starting to retrace a little bit. And you might be wondering, if you bought here, you might be wondering, oh, is it going to turn around and just keep going down? So is this an actual reversal, or is it just a little retracement here? And is it just a little stair step, and it's just going to really turn around and keep going? All right, and this is not 100% accurate, this Fibonacci tool. It's not 100% reliable. No indicator is 100% reliable. So you have to do your own research, make your own decisions. All right, so what I'm going to do is I'm going to consider this, the end of the uptrend is like my 0%. All right, this is the starting point of the retracement. All right, so I'm going to draw a line here and consider this the 0 line. Oops, actually, I'm sorry. You have to click annotate first. All right, you click annotate on stockcharts.com. After you make your chart, there it is. Okay. Now, after clicking annotate at the bottom of the chart, now I can draw my lines. All right, I'm going to draw a line. There we go, and hopefully it'll be accurate. Let's see, there we go. You can move the line a little bit, and then that's my starting point for the retracement, and then the end of the retracement, well, theoretically, it could be the end of this up move here, so we're going to say 104. So you might consider the high point of the up move to be at the beginning of the retracement, and if you might consider the beginning of the up move to be the potential end of the retracement. That's one way of looking at it. All right, so I'm gonna draw this line, move it around a little bit, make it a little bit more accurate. So 114 to 104. How far is it going to retrace? Is this a real turnaround? A real, is it just going to keep going down? Is it a real reversal or not? All right, so I'm going to plug in 114 and 104, and I'm going to use, here it is for the calculator here, I'm going to use it in the uptrend column, okay, because this is a retracement of an uptrend. All right, if you want to know if a downtrend is going to retrace and turn around back up and keep going, you want to use the downtrend section. All right, so the high was 114, the low was 104. Calculate. All right, and let's plot these three fib levels here. We'll start with the 38.2%. That's 110.18. All right, here we go. 110.18 would be about a little bit above 110, let's say. We'll do it like that. A little bit lower than that, I think. Right above 110. There we go. Okay, and we're going to make that a dotted line, just because I feel like it. All right. And then the next one would be 109. That's 50% retracement. Okay, so it'd be right in the middle there. 109 makes sense. And there we go. Try to make it a little straighter. There we go. And then, so think about it. That means if it turned around and then went down, 38.2%, it would be down to this line. If it retraced 50%, it would be down to this line. Let's do the third one, 61.8%, 107.82. Whoops, let's do it. 107.82. That's almost 108. There we go. Maybe a little lower than that. There we go. Perfect. All right. So we have our fib levels drawn here, or at least those three that I like to use. All right. So notice that this is not much of a retracement at all. It hasn't even hit that first level here, not to mention the second and third ones. Now the idea here is, so far you can be perfectly confident that this is not a true turnaround. It's not just going to keep going down, down, down. Of course, it always could. Stock market is unpredictable, but so far you can be confident that the uptrend is intact. If it hits that first level, all right, but then turns around and keeps going back up, then you can continue to be confident that the uptrend is intact. If it hits that middle level, the 50%, but then bounces off of it, then you could be fairly confident that the uptrend is still intact, but less confident. So you're more confident if it goes to here or less. It wasn't even close here. All right. If it goes to that first line or less and then turns around, then you can be very confident that the uptrend is intact. If it goes to that second line or less, you can be fairly confident, but not as much. Now, if it goes below this line, then you want to just you want to accept that this is a true turnaround and is not very likely to continue the uptrend. Okay, so if it goes down, down, down below this line, then if you have a long position starting here, you may just want to get out and take whatever profits you can get, because now it's very likely to keep going down. And now, in other words, that's a real turnaround here. Again, no guarantees, but at this point, if it crosses through down through that line, that's a true turnaround. It's not just a little stair step or a little retracement there. All right, now you can go in the other direction as well. All right, so this is AT&T, and we see a downtrend here from here to here. Is it going to keep going? Notice there's no retracement at all yet. Okay, but there's going to be one at some point. You can be pretty confident of that. So let's click on Annotate, and we're going to draw, let's say, draw a line at 42, about 42 here. and another one at around, let's say 30, I don't know, 39.50. And you can make your numbers more exact if you want to. I'm just rounding here to keep it simple. All right. And so you want to know if this downtrend, if it's going to start to retrace. All right. So really your 0 is here and your 100% is here. Let's go ahead and clear that out. Go back down. Downtrend, let's say the high 42, low 39.50. 42, 39.50. Let's calculate that. All right, we're focusing on the retracement, not on the extension today. Let's plot the first point at, let's say the 61.8. All right, so we're going to go, actually no, let me do it right. Let's start at the 38.2% retracement, which is not much of a retracement, and that's 40.455. Okay, so 40.45. Let's say 40 and a half. Let's go ahead and round a little bit, which is right about there, maybe a little bit below that line. And there we go, right about there. Gonna make it a dotted line. All right, so that's if it bounced here, if it went up here, then that would be a very minor retracement, and you could be confident that the downtrend is still intact. And so if you had a short position from here, you could probably just be confident that it's okay. And that's just going to keep going down in all probability. Let's say the next one, let's do the 50%, 40.75. That's an easier number for me to to do. All right, so that's right about there. Right about right there. Okay, so if it retraces and hits this, you can be confident that this is, the downtrend is still intact, but less confident. So you got to be more cautious with that. And then finally, a deeper retracement would be 61.8%. That's around 41.045. Can we just say 41? I think so. 41 and a little bit, 41 and a little bit more. So 41 and a tiny bit more, right about there. There we go. Actually, yeah, right there. Okay. If it retraces and breaks through this line, if it goes further than that, then according to the fib idea, this is a true turnaround. And if you went short from here, you may want to take your profits and just get out, because it really looks like the downtrend is over at that point. And it's not just a minor stair step. It's not just a minor retracement. All right. And so this is a really interesting idea. It's based on really ancient numbers that you see in nature, that you see in life, and can be used for trading. I recommend using this with other indicators such as RSI, moving averages, things like that, just to confirm. Because you want to, not just rely on necessarily on one indicator for your entire trading strategy. So this was an introduction, and by the way, there is software that will plot these for you. Okay, I like to do it manually, but if you could find an app or software that plots it for you, the retracement lines, that's fine too. All right, and it is subject to interpretation as well. All right, so if you found this to be helpful, please give this video a thumbs up on YouTube, and please like and subscribe to my YouTube channel, and also leave comments. I really appreciate that. And subscribing gives you updates on when I'm putting out new videos, and so that's a really great thing for you to do. Also, if you have questions or you want to get some help putting together a trading or investing plan, you can email me at any time. My email address is davidmodell@gmail.com. All right, thank you so much for watching and listening, and I'll talk to you again soon.